Welcome to interest.co.nz's morning briefing of what's news here and around the world. Everything you need to start the day in 90 seconds at 9 o'clock. Starting now with news of a 69% fall in MFS's share price in Australia. Shares in the finance and travel company MFS collapsed on Friday. Fears are growing it may not be able to service its debt and that it may meet the same fate as Rams Home Mortgages and Centro Properties. MFS owes $1 billion to lenders and is now trying to raise $550 million by selling shares in its travel agency. MFS has $150 million of short-term debt due in March. So why does this matter here in New Zealand? MFS owns a controlling stake in MFS Pacific, and investments with MFS Pacific in New Zealand are backed by a so-called put option. That means MFS must buy back any underperforming loans from MFS in Australia. More news on the credit crunch. Credit rating agency Fitch has downgraded bond insurer AMBAC by 2 notches from AAA to AA. Fears that bond insurers such as AMBAC would be downgraded were a big factor in heavy selling late last week on US markets. There are fears that banks would have to write off more than $200 billion from the value of their bonds if these bond insurers are downgraded. And looking ahead here this week, we'll watch out for news of the US recession and the credit crunch. And closer to home, the big news this week will be the Reserve Bank's decision on interest rates on Thursday. It is expected to keep the official cash rate on hold, but inflation is above the Reserve Bank's target band, and the rhetoric is likely to be hawkish. That was 90 seconds at 9 o'clock. I'm Bernard Hickey for interest.co.nz.